And that's where Michael Burry's story leaves us, a reminder that truth often whispers while the crowd screams. His journey wasn't just about money, it was about courage, conviction, and the willingness to stand alone when everyone else was blinded by greed. So ask yourself this: would you have the strength to question the system, or would you follow the herd? If stories like this make you think deeper about markets, psychology, and the hidden forces shaping our financial world, then you're in the right place. Subscribe to The Hidden Investor for more powerful stories that reveal what others overlook. Stay curious. Stay rational. And remember, sometimes the best investment you can make is in understanding the truth. People learn nothing from the past, he once said. They just learn to rationalize it faster. The same emotional cycles of greed and fear, that's what drives every crash. It's not derivatives or crypto tokens or .com stocks. It's the human tendency to believe we can outsmart risk, to assume that prices reflect truth instead of sentiment. And yet, we repeat it again and again. Why? Because optimism sells. Fear doesn't. The solitude of a thinker. Michael Burry's life after fame is almost monastic. He doesn't crave interviews. He doesn't manage public money. He spends time studying economics, history, and medicine, his original field. In one of his few public comments, he said, "The greatest investment is knowledge. It compounds forever." That statement captures the essence of who he is. For Burry, markets were never just about money, they were puzzles, reflections of collective behavior. He wanted to understand how systems fail, why humans ignore obvious warnings, and how incentives shape decisions. Perhaps that's why he always seemed out of sync with the world. Not because he was cynical, but because he was unwilling to suspend disbelief. Ask yourself this: how often do we silence our doubts just to fit in? How often do we follow trends because everyone else seems confident? That's the trap Burry avoided, and it's what made him different. His solitude wasn't a weakness, it was a form of strength. He turned off the noise, trusted his models, and followed the data where it led, even when it led to ridicule. In investing, that's the rarest skill of all: conviction in the face of universal doubt. The psychology of truth. When you listen to Burry speak in old letters, interviews, or leaked memos, one theme keeps resurfacing: the danger of emotion in markets. He believed the greatest threat to investors isn't volatility, it's bias. Confirmation bias, recency bias, herd mentality. The legacy of rebellion, Burry's warning for the future. When the dust of 2008 finally settled, the world searched for heroes and villains. Wall Street blamed the rating agencies. The rating agencies blamed bad data. Governments blamed unforeseeable circumstances. But somewhere far from the chaos, in a quiet California office, sat Michael Burry, a man who had seen it all coming and had been punished for being right. He didn't fit the image of a Wall Street conqueror. No suits, no celebrations, no CNBC appearances. Just silence, analysis, and reflection. He had turned his back on the game. But the game had not turned its back on him. Even after shutting down his fund, journalists, investors, and ordinary people kept seeking him out, hoping for one more prophecy, one more glimpse into how he saw the world so differently. Because that's what Burry had become, not just a trader, but a symbol of intellectual rebellion, a reminder that truth doesn't need approval. A new world, same mistakes. The financial world after 2008 promised reform. Regulators swore never again. Banks were fined, rules were rewritten, and the word subprime became taboo. But in time, memory faded, as it always does. Interest rates dropped to near zero, investors chased yield, and a new generation of speculative manias was born. First came the everything bubble, tech stocks soaring on dreams, cryptocurrencies claiming to replace money itself, meme stocks rising not on profits but on posts. To Burry, it was all too familiar. He returned to Twitter, not as a promoter, but as a warning voice, cryptic, brief, often deleted soon after posting. His tweets became like modern prophecies, dissected line by line by those desperate to decode his meaning. When he wrote "all hype, no fundamentals," markets shivered. When he said "the biggest bubble of all time," financial news outlets turned it into headlines. But behind the drama, the message remained the same: human psychology hadn't changed. He looked where no one else bothered to look, in the footnotes, in the data, in the places hidden behind the headlines. And that's the core of contrarian brilliance, not opposing the crowd for the sake of rebellion, but because you found truth in places they refused to look. Perhaps that's why Burry's story resonates beyond finance. It's not just about money, it's about courage. The courage to think differently, to endure loneliness, to trust reason over emotion. In a world of constant noise and social conformity, that courage is rare and priceless. His journey also reveals something profound about human behavior. Markets don't fail because of ignorance, they fail because of willful blindness. The information is often right there, in plain sight, but people choose not to see it because it challenges their narrative. And so, the cycle repeats. Euphoria. Denial. Collapse. Recovery. Over and over. The names and assets change, but the psychology remains the same. Burry just happened to be the one who caught the world in one of its grandest delusions. As the dust settled from the 2008 collapse, one thing became clear: Michael Burry didn't just predict a financial crisis, he exposed a human one. The crisis of overconfidence. The crisis of groupthink. The crisis of ignoring warning signs because they're inconvenient. So maybe that's the lesson he leaves us with, that truth, discipline, and skepticism will always be unpopular, but they are also the only things that protect us from disaster. The crowd will always be louder, but the data will always be clearer. And as Burry himself might say, if everyone agrees with you, you're probably too late. So, what happens when the next bubble begins to form? When prices rise for no logical reason, and the world once again insists this time is different? Will you have the courage to question the narrative, or will you join the celebration until it's too late? Understanding systems. He once said, "I have no desire to manage other people's money again." And who could blame him? The very system he had outsmarted had also drained him emotionally. But his legacy endured because his philosophy was deeper than just one trade. It was about skepticism, independence, and intellectual honesty. He showed the world that being early feels the same as being wrong until it doesn't. He demonstrated that conviction, when grounded in evidence, is worth more than consensus. In a way, Burry's story is a warning to every investor, every thinker, every ordinary person who wants to see clearly in a world clouded by noise. The truth is never comfortable. The path of independent thinking is lonely, often thankless. But history rewards those who stay disciplined when others lose their heads. Ask yourself, what would you have done in his position? Would you have followed your models, your logic, your instincts, or would you have given in to the crowd? Because every generation faces its own version of the housing bubble, its own collective illusion. The question isn't whether another bubble will form, it's who will see it coming next. Michael Burry's later predictions continued this theme. He warned about passive index investing, about government debt, about speculative tech valuations. And once again, people laughed. They said, "He's too early, he's always bearish, he doesn't understand the new paradigm." But if the past teaches anything, it's that being early is a mark of foresight, not failure. Even now, his letters and public filings are dissected by investors looking for clues. They want to know what he's shorting, what he's buying, what he's seeing. But the real lesson isn't in the trades themselves, it's in the thinking process. Burry's approach to markets wasn't magic. It was discipline. He read obsessively. He tested assumptions. He distrusted hype. Burry didn't back down. He sent angry letters to the banks demanding fair value. He fought with auditors, lawyers, and counterparties. His tone grew increasingly defiant. "You are committing fraud," he told them. And he was right. The more he pushed, the more the cracks widened. Within months, reality could no longer be ignored. The housing bubble burst in spectacular fashion. Lehman Brothers collapsed. Bear Stearns vanished. AIG imploded. The global economy spiraled into chaos. And suddenly, the same media that had mocked Burry was calling him a visionary. Newspapers hailed him as the man who saw the crash coming. Hedge funds that once dismissed him tried to emulate his strategy. Hollywood even turned his story into a movie, The Big Short, immortalizing his lonely crusade against collective insanity. But behind the legend, there was exhaustion, bitterness, and disillusionment. In interviews, Burry often spoke about how painful those years were. He didn't celebrate his profits. He talked instead about betrayal, not by the market, but by human nature. The greatest risk, he said, is not financial. It's psychological. The system didn't collapse because of complex derivatives or interest rates. It collapsed because people didn't want to see the truth. They preferred comfort over honesty. That statement goes beyond finance. It's a reflection of society itself. We build bubbles not just in markets, but in our beliefs, in politics, culture, even technology. We surround ourselves with narratives that make us feel safe, even when the data tells a different story. And when someone like Burry comes along to challenge that illusion, our first instinct is to attack them. Why? Because truth disrupts comfort. During the post-crisis years, as governments rushed to bail out the very institutions that caused the disaster, Burry withdrew from public life. He shut down his fund, turned off his Bloomberg terminal, and went back to what he loved most: research. Quiet study. The battle against the system, when truth threatens power. By 2007, the storm Michael Burry had predicted for years was finally beginning to take shape. The air on Wall Street was still filled with arrogance and denial, but beneath that surface, behind the champagne glasses, the television optimism, and the endless buy recommendations, cracks had become impossible to ignore. Mortgage delinquencies were rising faster than anyone could rationalize. CDOs that were once labeled as safe as treasury bonds were beginning to wobble. Traders started to panic in silence, whispering about liquidity issues and temporary volatility. The system was fraying. But when Burry tried to cash in on his winning bet, the credit default swaps that now should have been worth billions, he encountered a new and sinister obstacle: Wall Street refused to pay. The banks that had sold him those swaps, giants like Goldman Sachs and Deutsche Bank, began marking the positions at artificially low prices. They told him the market for those instruments was illiquid and that true value was uncertain. But Burry knew exactly what was happening. The same institutions that had once called him crazy were now manipulating valuations to delay his profit, buying time to unload their own toxic assets before acknowledging the truth. It was a final act of denial, a desperate attempt by the financial elite to protect themselves as the walls closed in. This wasn't just about money anymore. It was a moral standoff. Burry had seen the rot at the center of the system, and now, he was confronting its full power. The very market he had bet against was now trying to silence him. Can you imagine that? You spend years studying the data, enduring ridicule and isolation, only to be proven right, and then the very people who lost try to rewrite the rules so your victory doesn't count. It's the ultimate irony of finance: truth is negotiable when money is on the line. Michael Burry didn't just make money, he made a statement: thinking for yourself is the hardest, most valuable skill in investing. And perhaps that's the greatest irony of all: in a world obsessed with following the crowd, it took one man's willingness to be hated to save others from ruin. But the story of Burry versus Wall Street wasn't just about a trade. It was about the anatomy of a delusion, how entire systems can blind themselves to risk, and how truth can hide in plain sight until it's too late. So ask yourself, if you had seen the data, if you had known what Burry knew, would you have had the courage to act? Or would you have done what everyone else did, look the other way and hope the music never stopped? Because, as history shows, the music always stops. The only question is, who's still standing when it does? Lenders kept approving riskier and riskier loans, sometimes with no income verification at all. Banks were so addicted to short-term profit that they couldn't stop themselves. It was like watching a train speed toward a cliff, with everyone on board cheering because the view was great. Burry, meanwhile, kept updating his models. He saw that adjustable-rate mortgages, the ticking time bombs buried in the financial system, were approaching their reset periods. Millions of homeowners would soon face skyrocketing monthly payments. The defaults would be inevitable. But when he presented this to his investors, they accused him of paranoia. One investor even demanded he liquidate the CDS positions, fearing total collapse of the fund. Burry refused. He locked redemptions to protect the trade. It was the only way to save his investors from themselves. Yet, doing so made him even more unpopular. The irony was cruel. The man trying to save others from financial ruin was being branded as the villain. While his investors fumed, Burry spent sleepless nights tracking data points, foreclosure rates, delinquency spikes, regional loan performance. He wasn't guessing, he was measuring, observing, verifying. And what he found confirmed everything. By early 2007, the cracks in the subprime market widened. Banks began quietly downgrading mortgage securities. The same traders who mocked him months earlier were now whispering about unexpected defaults. But still, the public narrative remained bullish. And here lies one of the most fascinating psychological paradoxes of markets: people would rather be wrong with the crowd than right alone. Wall Street's collective denial had become self-sustaining. Fund managers, analysts, and executives all reinforced each other's optimism because to question it was to risk your job, your reputation, your status. In that kind of environment, someone like Burry, data-driven, antisocial, skeptical, was destined to be an outcast. The storm before the collapse, when conviction meets isolation. As the months dragged on, Michael Burry found himself in the eye of a storm of disbelief. His conviction, once a quiet confidence, had become a source of ridicule and anger from nearly everyone around him. The financial world was still euphoric, awash in profits, bonuses, and champagne celebrations. Every index was climbing, every real estate agent was boasting about record demand, and every television analyst was proclaiming that housing prices never fall. Yet, buried beneath that euphoria, Burry's analysis screamed the opposite. His models, spreadsheets, and stress tests told a story that no one wanted to hear: the system was mathematically doomed. To the outside world, Burry's decision to short the housing market looked insane. Month after month, his fund's performance fell as premiums on his credit default swaps drained cash. Investors were furious. They called him reckless, arrogant, and out of touch. Some demanded withdrawals. Others accused him of manipulating the numbers. But inside his dimly lit office in Cupertino, Burry sat unmoved. The man who had once studied neural circuits was now studying the circuits of global finance, and what he saw was a buildup of toxic risk with no escape valve. Imagine the psychological pressure of that moment. You've done the work. You've read the data. You know you're right. But the market, the ultimate judge of value, tells you you're wrong every single day. How long could you hold on? Would you bend? Would you doubt yourself? This is where Burry's character shines. He understood something fundamental about investing that most people never grasp: truth takes time. Markets are not mirrors of reality, they are mirrors of emotion. And emotions, greed, fear, denial, can overpower logic for long stretches of time. Wall Street was deep in denial. Ratings agencies continued to give top grades to subprime bonds. The battle begins: Michael Burry versus Wall Street. In the mid-2000s, while Wall Street basked in the glow of record profits and a seemingly unstoppable housing boom, one man was quietly reading the fine print. Michael Burry, a neurologist turned hedge fund manager, had a peculiar gift: he could see cracks forming beneath the glittering surface of the financial world. To most of Wall Street, he was a nobody, a data-obsessed outsider buried in spreadsheets. But to those who understood what was coming, he would soon become a symbol of defiance against an entire system. Burry's story is not just about predicting a crash. It's about the courage to stand alone, to question what everyone else accepts as truth. At the heart of his journey was one fundamental question: what happens when everyone believes they can't lose? Burry founded Scion Capital in 2000 after leaving medicine behind. He wasn't your typical investor: no flashy suits, no CNBC appearances, no corporate dinners. Instead, his world revolved around financial filings, balance sheets, and a restless intellect that refused to accept easy answers. He approached investing like a scientist, testing hypotheses, examining anomalies, and letting data, not emotion, guide his decisions. By 2003, while others celebrated the American dream of easy mortgages and endless home appreciation, Burry saw something darker. He began to dig into mortgage-backed securities, complex financial instruments that packaged home loans into tradable assets. What he discovered shocked him. Many of these loans were given to borrowers with poor credit histories, and yet, Wall Street was rating them as if they were rock-solid investments. Burry realized that the system had built a house of cards, and everyone was pretending it was made of stone. The deeper he dug, the more certain he became. These subprime mortgages would begin to fail once adjustable interest rates reset. And when that happened, the supposedly safe securities would collapse. But how do you profit from a bubble that no one else sees? That's where his genius came into play. Burry approached investment banks like Goldman Sachs and Deutsche Bank with a strange request. He wanted to short the housing market. Specifically, he wanted to buy something called a credit default swap, CDS, a form of insurance that would pay out if the mortgage bonds failed. The bankers didn't take him seriously at first. Why would anyone bet against something that had never collapsed before? To them, Burry seemed eccentric, maybe even delusional. But to Burry, the math didn't lie. The numbers screamed disaster. Still, every revolution begins with ridicule. Burry's investors, many of whom trusted him implicitly, began to lose faith as he poured millions into these unconventional bets. To them, he was throwing away money on an idea that defied all logic. One investor even tried to sue him. Yet, Burry refused to yield. He was fighting not only against Wall Street's arrogance but also against the impatience of his own backers. This is the part of the story where most people would have cracked under pressure. But Burry wasn't most people. He had an almost stoic indifference to public opinion. What mattered to him was truth, and the truth, as he saw it, was that Wall Street's foundation was rotten. Think about it. Would you have the courage to stand by your conviction when the entire world calls you wrong? When your reputation, your money, and your sanity are on the line? That's the kind of question Burry's story forces us to ask. As 2006 turned to 2007, the first signs of stress began to appear. Mortgage defaults ticked upward. The market's confidence started to falter. Burry, exhausted but vindicated, watched as the catastrophe he had predicted began to unfold. The same bankers who had laughed at him months earlier now rushed to hedge their own portfolios. The same investors who had questioned him now wanted back in. And Burry, the quiet outsider who once analyzed X-rays and neural pathways, was now analyzing the financial brain of Wall Street and finding it fatally diseased. The war had begun, and Burry was winning the first battle. But at what cost? Because while his trades would make him and his investors millions, they also exposed something far deeper, the fragility of an entire economic system built on illusion. The question wasn't just whether he could beat Wall Street. It was whether Wall Street could survive the truth. But in truth, that isolation became his strength. By refusing to socialize, to join the chorus of optimism, Burry kept his perspective clear. He wasn't chasing trends or appeasing clients, he was pursuing accuracy. In a world driven by narratives, he was driven by numbers. And slowly, those numbers began to tell a terrifying story that no one could ignore. By mid-2007, subprime lenders like New Century Financial began collapsing. Homeowners started defaulting at unprecedented rates. Suddenly, the impossible became reality. Burry's CDS positions skyrocketed in value as the bonds they insured began to implode. His investors, once furious, now saw enormous gains, but not one of them apologized for their doubt. In the midst of the chaos, Burry's fund reported over 400% returns on those trades. Yet, victory didn't taste sweet. He later described it as a hollow win, because while he had been right, millions of families were losing their homes, and the global economy was entering freefall. His profit came not from creation, but from collapse. This raises an uncomfortable question: what does it mean to win when the world loses? That question haunted Burry long after the dust settled. He wasn't motivated by greed, he was motivated by truth. His warning wasn't a celebration of destruction but a desperate attempt to expose systemic blindness. But in the world of finance, truth is often punished before it's rewarded. By the time Wall Street realized the scope of the disaster, it was too late. The banks that had laughed at him, Lehman Brothers, Bear Stearns, were collapsing. Governments scrambled to prevent total economic meltdown. And as trillions evaporated, the very people who had called Burry crazy now hailed him as a genius. But the price of that genius was solitude. His fund eventually closed. He turned away from Wall Street's glare, preferring quiet study over fame. Yet his legacy endured, a symbol of independent thought, of the power of analysis over emotion. These are the silent killers of rational thought. And they don't just appear in trading. They govern politics, technology, even social media. The more data we have, Burry warned, the less we seem to think. That paradox defines our age. We drown in information yet starve for understanding. We scroll endlessly, yet absorb nothing deeply. Burry's message, if stripped of finance, is philosophical: discipline is freedom. Knowledge is leverage. Independent thought is survival. And that's why his story resonates beyond Wall Street. Because every field, from investing to everyday life, rewards those who can see through illusions. The real Big Short, in a sense, isn't about betting against the market. It's about betting against collective delusion. The modern Cassandra. History is full of prophets who saw disaster coming and were ignored until it was too late. In mythology, Cassandra was cursed to predict the truth but never be believed. In the modern world, Michael Burry became that figure for finance. He predicted the housing collapse. He warned about speculative excess. He cautioned against blind faith in passive investing. And every time, the reaction was the same: mockery first, validation later. But being right too early is the same as being wrong, at least, temporarily. That's the burden of visionaries. I was never seeking fame, Burry said. I was seeking truth. That pursuit came at a cost: isolation, stress, even temporary blindness, a physical manifestation of his inner battles. But it also brought him peace. Because when you understand the system, you no longer fear its collapse. You expect it. You prepare for it, the lesson for investors and everyone else. What, then, is Michael Burry's real legacy? It's not just the billions he made, or the books and films inspired by his life. It's the mindset he left behind, a blueprint for critical thinking in an age of noise. Read deeply. Most people skim the surface, the truth hides in the footnotes. Think independently. Consensus is comfort, not truth. Be patient. Markets test conviction. Time rewards clarity. Question incentives. Whenever someone says trust me, ask what they gain if you do. Stay humble. Being right doesn't make you invincible, it makes you responsible. These aren't just investing rules, they're life principles. Because, in the end, Burry's battle was never just against Wall Street. It was against human nature itself. The final reflection. Imagine for a moment that you could see the future, that you knew a system everyone believed in was about to fail. Would you have the courage to act on that truth? To stand alone, mocked and doubted, while the world celebrated its own illusion? That's what Michael Burry did. He wasn't lucky. He wasn't guessing. He was disciplined enough to see clearly when others chose blindness. And that's the ultimate paradox of his story: he didn't just win against Wall Street, he won against human complacency. So when you next hear about a market boom, a can't-lose trade, or a new paradigm, remember Burry's quiet voice cutting through the noise. The more you believe it's different this time, the more it's the same. The crowd will cheer. The charts will rise. But somewhere, in the background, a lone thinker will be watching the data, waiting for the illusion to break. That's how systems evolve. That's how truth survives. And that's how legends like Michael Burry remind us that wisdom doesn't shout, it whispers. Because the real victory isn't in predicting collapse. It's in seeing clearly when the world refuses to.